With the recent volatility that we've been seeing in the markets, there's some nice pullback setups taking place across a variety of markets. In today's video, I'll share one which is on my radar, and that's lows. Not LOW lows, but rather just ticker symbol L. I'll share the reasons why I like lows in today's video, but be sure to do your own research as well. Now, the first thing I like about lows is the fact that we've had a strong trend all the way up until this pullback. You can see that very easily with this green line, and that green line is our market pulse line. So all the way up until this recent pullback, we were in a stage of acceleration, and we had a very strong bullish trend. Every single time we'd pull back into the market pulse, you can see how we bounced up from there. So that's number one, we had a strong trend. Number two, we were able to skew the risk to reward in our favor. Now, to help illustrate this, let me use the Fibonacci levels that I have drawn on my chart, and I'll first show you where I got them from. I'm comparing this swing and a few others to try and get an idea of, in this entire rally, how has lows behaved? What has been its personality? So by comparing these swings, we get an idea of the typical sell-off inside of lows and how it reacts from those levels. I took each of those sell-offs and I projected them from our current high of 78.55. That gives us this cluster right down here from 75 at the upper end of this all the way down to 74.36, a fairly tight zone all things considered. So that gives us a place where we want to look for an entry. We want to see signs of price stabilizing and price reversing. I'll talk about those signs in just a second, but now that we have a good understanding of where these levels are coming from, let's take a look at the risk to reward idea here. In this cluster, the key level that stands out to me is 74.50. It's that nice clean price marker. Outside of 74.50 for the entry, we have the stop on the other side of 74. So if we don't really hold 74, I think this idea is broken. For our target side, at the bare minimum, I'm looking to get up to where I would expect to see some resistance, and that's near 76. 76 would be where below this candle we had the slight little breakout and a pullback to the market pulse line. So I'm not trying to be too greedy here for a move back up to 78.55, rather just up to 76. So entry 74.50, first target 76, stop on the other side of 74 is generally what I'm thinking for this trade. Now we move on to the next idea, which is some catalyst. We have a squeeze forming on the daily time frame chart, and there's 4 other time frames as well which have a squeeze brewing up. If I come into the 2-minute and we use our MTF squeeze labels, you can see the 5 time frames really easily. We have the daily time frame with the squeeze, we have the 30-minute, the 20-minute, the 15-minute, and the 10-minute time frames, all with squeezes building up. Back to the daily time frame, this squeeze so far looks like it's been losing momentum. However, while this momentum has been decreasing, take a look at today's price activity. Really just looks like the bears lost a lot of steam today. With the momentum bar down here, you would have almost expected to see a big red candle, very similar to what we saw yesterday. Instead, you saw a smaller candle, we saw bulls stepping in, the sellers were really only able to get a few points below yesterday's price, which gives you this idea that, hey, maybe there are bulls hanging around here looking to buy price near 74.50. So those are all the reasons why I like this particular trade inside of lows. We have a nice strong trend, and we're getting a pullback in that trend. That pullback in that trend is down to key Fibonacci levels, where previously lows has proven to us that, hey, we do see buyers coming in and picking up price from this pullback zone. We're also seeing a squeeze forming, not just on this time frame chart, but 4 others as well. There are smaller time frames, with the daily being the largest one. Now the question is, how do we actually take this entry? When do we know if we want to take this entry? Well, for that, I have a few different ideas that I like to use. The first is off of the 1-hour time frame chart using the edge signals confirmation. That's this green arrow that you see on our chart, and that's our overbought, oversold confirmation. So here we're getting confirmation that we're officially in oversold territory, and we are looking for buyers to step in. If instead of the 1 hour, you want to proxy for the daily time frame chart, the 4 hour is a nice middle ground where we have yet to see that confirmation, and the 4 hour, if we did see that, might be better for a slightly longer term swing trade if you do want to participate in this for a little bit more than just that 76 price level. Up until we had this pullback, you can also see we had multiple edge signal confirmations in this upward trend, Again, all signs pointing to more upside inside of lows. So that's my idea, one idea where you can take advantage of this recent volatility and use it to build up some nice positions at better entry prices in stocks where we had some nice trends and we have some nice squeezes. Take care, everyone. Good luck trading, and I'll see you in our next update.